The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Now, the author of The Path of Least Resistance and the Tech Insider, David White.
Good afternoon, traders and all the ships at sea. It is a wonderful and beautiful Friday. It is March 9th, 2012, and this is the day that Barbie was launched in 1959. Of course, I didn't ever get any Barbies. I had the equivalent. I remember having the G.I. Joe. I had the Jeep, and I had the Mercury astronaut capsule, all which later my mom all gave away to my nephew, who destroyed them all. They were probably worth a great deal. I just remember coming in and seeing all of it gone one day. Thought it would always be in that attic. One day I'd be able to come dust them off, but no more G.I. Joes for me. And I guess Barbie's kind of a rite of passion for everybody else. It was neat. Anyway, it is sunny and 83 today in Clearwater, Florida, for all those people that want to know what it's like. Just another gorgeous day. Unfortunately, the only thing that I disliked was an extra 15 minutes driving here today, because everybody and their dog is down here coming to the beach. It is full-on season for the vacationers, and of course this time, though, it's almost all wonderful little co-eds down there on the beach. So I think I'm going to go down and have dinner down there by the time after we get off here tonight, but watch the sunset. But it's going to be just, I tell you what, took the dog out for a little walk today, and you just couldn't ask for bluer skies and a better, nicer breeze and a more gentle sun out there. So actually, I'm feeling pretty good. Sun can almost, on your face, can almost be like a drug. On the radar today, options expiration with 5 more trading days after today. Market's pretty much acting like I thought it would. Once we had the pullback and didn't get a lot of volume, pretty much looked like we would come right back to this 1375 on the S&P. So let me check it real quick here. And, you know, we got up to that, what was it for the high here today? 1374. We've pulled back a little bit, but right back up to resistance. One of the things that I learned early on from one of the market timers on TFNN, this goes back to about 2000, 2001, and that is to be very wary when markets hang out right at the breakout level and keep coming back to them over and over again, because you're either probably going to get a false breakout or a real breakout. And I continue to think we're probably going to have some kind of spike, and until we get that spike, we will not know whether or not we get the volume we need to take this market up to 1425 on the S&P. And, you know, we could still go up there, have a false breakout on no volume, have this thing roll back over. But until we get there, I don't know. But right now, it's awful hard to think that we don't have a pop going into expiration week here, making all the people who think that this market's going to roll over absolutely mad. Actually, there's some stocks, started talking about this on Monday, or actually on Wednesday, since I wasn't here Monday, but in the newsletter I talked about it Monday. Actually got out of my shorts we had on Friday in the newsletter and started setting up for a what I thought was going to be this very short-term turnaround and a test back up here at the top. But you know, even with that downtrend that we had to, what, about 1343 on the S&P, the volume didn't pick up to the level that makes me think this thing's going to totally fail. I was thinking we'd probably close at 1375 today. Certainly did test it. Volume is going to be light again, but it's light up and it's light down. We're going to have something to really move this market out. Just 2.6 billion shares today, so another day with a test on the higher. coming into Friday, not 2.7 billion shares now. Going to be yet another low volume high, but we've seen so many of these, and they haven't turned anything at all. 80% of options expirations from the Wednesday, the week before, to Friday's expirations are, and still are, even with weekly options, tend to be bullish. So, it's one of those trends where it's very hard to go against a weekly or a monthly options expiration week where we continue to have it. Now, could it just hang out here for a little while? Certainly could, but I still suspect that if you're bearish, the thing to watch is some kind of huge 30, 40 point, maybe 30, 40 point S&P pop that evaporates over or intraday, or one that pops up and then closes back below that 1375 high. But we're going to have some kind of signal. It's probably going to drive everybody nuts for a while. And we're going to, we've got 5 more days to see something like that play out. Non-farm payrolls and unemployment numbers came out pretty much what everybody was expecting. So we had kind of a slow melt up today that probably ran the shorts out that didn't want to be short over the weekend. And my call, I'm kind of rationally optimistic here. Since I don't see a lot of volume down, although the volume has been down a little stronger than it has been up. We always get 3 days up with lighter volume and 1 day down with a little bit more volume. I still think that we're probably going to have 5.5, maybe 6 billion shares to decide whether this market's going to break out of this consolidation pattern and go higher and continue to go higher, or it's going to bust out and go lower. But I think we're going to have that 5.5 to 6 billion shares on the New York Stock Exchange consolidated tape to really get anything going. Until then, I continue to be rationally optimistic, and that just means that the economy may not be zooming here in America, that the entire world out there needs products made by us, airplanes. I just saw Boeing get a order for 87 F-15s yesterday. We still make enough stuff to keep things going, and a lot of products that we make and services we make are still needed by countries. Just saw that Brazil went to the 6th largest economy, supplanting the United Kingdom. What was that? I think that news came out on Wednesday. So we still see countries that used to do literally nothing becoming new powerhouses with both things like natural resources and commodities like foodstuffs. And we see a lot of that coming out of Brazil and South America as they buy more and more of our Caterpillar and John Deere tractors and everything else, and really get to 21st century farming techniques, and they're able to produce a decent product at a decent price. And we sell them our John Deere tractors, and they ship us nice and tasty fruits and vegetables in the middle of winter. So I continually think that the market and the world is going to expand, and while we may not be expanding with it, at least it's keeping us from sinking too fast out there. This is the 3rd anniversary of the March 2009 lows. I will remember them because I was all over them. I remember exactly the stocks I had and pretty much why I bought them. It was very neat to see. I can remember CSIQ, Canadian Solar. I had American Power, APWR. About 3-4 days, maybe 7 days after that, I bought PERY, which is Perry Ellis. And I had a couple more positions after that and bought S&P longs. But I always remember those bottoms because if you do it right and you find stocks like that tested previous lows on 10% of the volume, which I think is what CSIQ did. If you look think it was about $3. It was testing a previous $3 low of about 3 months before on 1/10 the volume, and you knew the market was ready to actually roll. And you just have to sit for 2, 3, 4 weeks, and you can make what in those kind of conditions you make what you fight for a whole year for now in a month or two. But beautiful stocks to look at if you want to see what I look for. I'm always looking for the stocks that have the biggest divergence of previous lows and previous highs to go short and long. And those are 3 excellent March 2009 lows to go back and look at. CSIQ, American Power, APWR, and just a few days after that, I think PERY, and there were a couple more I had, plus the indexes. But those, it's days like those, and Sears Holding at $19 in 2004. I can remember the ones where you just saw those 10% tests of previous lows that ended up being huge and monster winners for me over time. But one of the things I wanted to bring up is swing numbers and the indexes, and do they actually mean anything over time? Eventually, at least this is part of my theory, I'm not trying to put words in any other market timer here at TFNN's mouth, but just one way to think about it. And it's called the gumball paradox. The idea is, what do you really know? Let's say that we've got 2 wonderful little gumball glass containers. Maybe they got 100 or 200 gumballs in them. Let's just say that they were all, let's say that we've got 3 black gumballs in there and the rest are all red. And you really can't see what's in them. If you continue to pull gumballs out and you continue to pull out red ones, and you've got, what, 200 red ones and 3 black ones, pulling out a red one really doesn't give you that much more. You don't know about that. But certainly if you pull out 1 black one, you know that there's only 2 black ones left. So what do you know when you really get going? And what happens if you have a devious little munchkin maybe under the table, and he's cut a little hole back in there, and every once in a while he puts 1 more black one in the bottom that you really don't see? And that's kind of how the markets go after time. They're not going to be exactly as you left them, and even though we might come back and test a previous low or a previous high in a stock or an index or in the entire markets, the things do kind of change over time. Not everybody is sitting there statically. And, we have that little mischievous, just mischievous kid, maybe every once in a while putting an extra black ball in or pulling one out. And things do kind of change over time. And what is that all about? It's called survivorship bias, especially in the indexes. And the smaller indexes, it becomes much bigger. If you have a stock move in and out of the Dow 30, that's 1 stock. Let's say it goes out of business or it's bought by another company. How much is that going to affect the way that the index comes back in and gets tested? Of course, the S&P 500, how many of those stocks in the S&P 500 were there in 2009? We'll get back and talk a little bit more about survivorship bias.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective and maximize your returns. Direxionshares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at Direxionshares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direxionshares carefully before investing. The prospectus and summary prospectus contain this and other information about Direxionshares. To obtain a prospectus or summary prospectus, please contact Direxionshares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of the money game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
Would you like to discover the next great tech stock? David White, TFNN's technology guru, has just launched his new newsletter, The Technology Insider. In his newsletter, David will be looking for those shining stars that may turn into the next Apple, Microsoft, or Cisco. David combines his technology background as a software programmer with his market skills as a successful professional trader to give you this unique newsletter. We're on the verge of the next great tech run. With the Technology Insider, you'll be in front of the run-up and not lagging behind. David is developing a long-term investment portfolio. Therefore, we're only offering the Technology Insider as an annual subscription with a remarkable price of only $395. That's right, for a little over $1 a day, you'll receive the fundamental technology wisdom and technical trading skills of the Technology Insider, David White. What are you waiting for? Go to the front of TFNN.com, click on the link on the front page, sign up for your 2-week free trial, and become a Technology Insider today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
As we come back, we were talking about survivorship bias, and it just kind of hit me now that we really do have this 3-year anniversary of the lows coming out of the real estate debacle. We know when we were looking at the highs being broken and the market really rolling over significantly, just what happened into that. But if I remember right, there's something like 30 different stocks in the S&P 500, and why it's probably not a huge, 30 out of 500, probably not a big deal. It is not the exact same index. Stocks have split. Companies have issued more stocks. Some have bought some back. Those stocks will not act exactly like they did before. So as we continue going on and down the road, a lot of times those indexes over time tend to be a little bit different than what we have. Now, they may be close, but we know, if you just look at them, you know they're going to be different over time. And the technical term for that is survivorship bias. You can look it up, but it's you just need to know that it's not always exactly the same thing we're looking at. Things do change over time, and we need to be aware of that as we go through and test and retest. One of the other things I also like to bring up when we're doing testing in markets is Karl Popper and falsibility. One of the problems, especially if anybody brings up something new to me, that I want to be able to do is know exactly how I can prove when it doesn't work. If you come up with some kind of theory, and a big one now is global warming. Now it's called global climate change. One of the ways that my BS detector automatically goes off is if you can't tell me a way that I know that I can falsify your argument. If you tell me that there is something going on, global cooling, global warming, good examples, you should be able to tell me what kind of test, what kind of statistic, how would I know that if what you tell me, even though you might think it's correct, how am I going to know that it's wrong? And it's just something that I should always think about. Karl Popper, if you look it up, he's got a very good argument on why you know and how you know that arguments are wrong and hypothesis. And another thing that you should actually be thinking about. You can always give me a call at 877-927-6648, and we'll discuss what you want to. We're going to get to some other stocks. I think we've got a phone call here coming up in just a second. And while we wait for that, just saw Altera come out with some news last night. We'll probably get to that very shortly. But it's, there's a few things going on, and part of it has to do with hard drive shortage. Part of it has to do with some other things. I don't think that these are all long-term issues. But in the meantime, we do have Danny from Atlanta. How are you doing today, Danny?
I'm doing great, David. How about you?
Boy, I tell you what, I'm glad that I'm down here this year instead of up and seeing 45 and cloudy skies today.
Yeah, I'm going to be down in Sarasota this weekend. I know it's going to be nice.
Certainly. So you wanted to look at BORN, China New Boron Corporation?
Yes.
Do you know what these folks do?
They produce edible corn alcohol.
Ooh, very interesting. In China, the company sells its alcohol products primarily in ingredients to its producer. It's a grain-based alcoholic beverage that is sold in China and retail stores. So they're less like a Pacific Ethanol and more like a Coors or something like that, right?
You know, I'm not exactly sure that far down in the details of it. I'm interested in a buy point if you see one.
Okay. It also produces distilled dry grains with soluble feed corn germ. Looks to me like they make a lot of cheap beer in China. Probably not a bad business to be in there. I think if I lived in China, I'd probably do a lot of drinking too. So anyway, December 28th, you had a nice low out here, 280,000 shares at, what is that, $3.06. You're getting awful close to that. What I dislike is the volume that we are coming into here. I suspect if you wanted to buy this you need a test of the low at 306 with lighter volume. You want to hang on through the break?
Yes, please.
Okay. We'll be right back from Danny. And I guess he's calling from Atlanta. Don't get many calls, Atlanta calls. We'll have to find out about that. But we are talking about this China New Boron Corporation. Apparently they do alcohol in China. It's got to be some kind of beer-like beverage. We'll have to find out more about them during the break. We'll be right back.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
folks. This is Tom O'Brien. If you want to get great trade setups in equity as well as the option market, come over to TFNN.com and test drive my daily newsletter, Market Insights, for 2 weeks absolutely free. Each trade setup comes with a profit projection as well as stop placement. Included in Market Insights is a Twitter alert service. This allows you to take advantage of intraday setups. Volatility is back in the markets. What does that mean to you? To me, it spells short-term opportunity each and every day. The days of trending up on lighter volume are gone. We have come off the highs with volume across the globe. Don't get caught in a complacency trap. Many of the indices have given back 2 months of trading in 1 week. We have a trader's market. You can take advantage of this trader's market by test driving my daily newsletter, Market Insights, free for 2 weeks. Market Insights will give you the edge you're looking for in the markets. Go to TFNN.com under newsletter. Hit the Market Insight tab for your 2-week free test drive right here, right now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and the Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by Direxionshares. To learn more about tactical tools for the sophisticated active investor, hit the Direxionshares banner on the front page of TFNN.com.
And as we come back, we're talking with Danny from Atlanta. Are you there, Danny?
I'm here.
Okay. Are you looking at this as kind of a big picture where this thing took off with volume? What is that? Back on the 11th of January, 11th and 12th, had huge volume, and now it's come back, filled this whole gap, and you're looking at buying it at support. Is that the deal?
Yeah, that's the deal.
I mean, it's a good-looking pattern. You still have a high-volume high at $4 and what is that? $4.90, 1.3 million shares on January 12th. It never has really broken. It got awful close to it. So you could still think that you could either get that or get the gap at $5, which it's this thing. Actually, see if I can get it just a little longer time frame here. As I look at this, we see maybe that'll work a little bit better. Okay, so you've got a long-term gap, and that happened on the what is that? October? It's probably what, June 4th, July 4th, something like that. Came down on some fairly decent volume and set that gap up, which has been resistance at about $5 since midsummer. I'll call it that. last year. So not a bad looking trade. $3 to $5, long trading range. You still have the possibility of getting down to $2.78 with 570,000 shares from October 4th, and that's your risk. Have you been watching this trade?
Yes. Yes, I have.
I mean, it kind of looks like you had a nice setup here, and at least somebody over the last, 10 days has maybe been slowly getting into it. Today looks like it's coming back a little bit longer. I think that your parameters for your trade would have to be this thing testing 306 on lighter volume and not going below that $2.78 low back from October 4th of earlier that fall. But I see what you're looking at. I don't know a lot about the company. I tried to find out some about its financials, especially when I look at these small cap companies from China. You're always worried about the books.
Yeah, that is a worry.
But I mean, as far as a chart, this is a beautiful looking chart, and 306, and you've got to accept risk to a close below 278 with higher volume. So I think you've got something that looks kind of interesting here.
What kind of volume would you like to see on that test?
I'd like to see the thing. I have a feeling that the volume's already too high for this 306, because the December 28th low came in with 160,000 shares, and you're already going to be doing what 350,000 today. So my guess is this thing's probably going to get down into the 280 range, 285. At that point, you really would love to see this 278 to really get the best risk reward you could. That'd be the one I'd be shooting for on this thing. If it could actually hit that one, would be very nice. And you got 570,000 shares, 350,000, 300,000. I'd be all over it at that point. Your risk reward's just kind of tough here until it does test that 278. But if we just got just a little bit of a pullback, probably wouldn't take more than a day or two to hit that, I don't think, especially with the little move we've had out of here today. So not a bad setup, but I always look for at least 50% lows. You don't always get them, and in this one it's kind of hard to say, but if you could get 250,000, 300,000, I think you'd have excellent risk reward. You've got 100% move possibly in this thing back up to that around that $5 level. So you've got literally everything great on this, even that high volume high you can almost count into. So I like the setup and I like the trade. But just need to have a little bit more patience, I think. Thanks for the call.
Thank you, David.
And that was Danny from Atlanta. You can give me a call at 877-927-6648. And if you find a really nice setup like this, do give us a call and let everybody know it. In the Tiger community, we'll go through your particular stock. I had just a few things to go through here. Let me get back to them. I was talking a little bit about Altera and other chip companies. I noticed that they and a few other ones, Texas Instruments, came out. We're talking about lower volumes. And I don't think that they really hit that hard. We'll check on the stock here in a little bit. But I think that there's several things going on that why I wouldn't be buying them now are a pretty good explanation as why these stocks are not getting hit harder. One, that most of them are going to lower powered chips as we see more things like iPads and cell phones looking to get much more time out of the batteries. They're having to go to lower powered chips. Lower powered chips, almost by necessity, as you make them in smaller and smaller dies, end up being less power consumption. A 22 nanometer chip now, we'll say like Intel's brand new fab that builds these 22 nanometer chips, is going to use about a fourth of the power of a 28 nanometer, and almost all the technology in a lot of cell phones now is 38 or 42 nanometer technology. So you could cut power consumption on a lot of chips by half. A lot of times these cell phone manufacturers just can't afford to buy something like a Texas TI chip or an Altera chip because they do suck so much power in comparison to a lot of other chips that people are literally making out there, and Intel is picked up 4 major contracts because they're the only company capable of making these 22 nanometer chips and 24 nanometer chips without problems. AMD actually ran into a big problem with that and sold part of TSMC's fab. I think they own 8 or 15% of it. So they really don't have anybody to go to either to make high-quality small chipsets out there. You also have the hard drive shortage. And I think what everybody's looking for is that a lot of the hard drive shortage, that the tsunami problems in Japan have really hit these companies kind of hard already. And right now, they're kind of looking past that, knowing that in about 6 months, 4 months, we're going to be through the hard drive shortage, that in October, we're going to probably see Windows 8 start shipping. And pretty much everybody's, even though a lot of people, let me put it that way, in the tech industry are proclaiming the death of the PC, I suspect that there's an absolute ton of them that are needing to be upgraded. And we'll probably have 12 to 18 months of another great upgrade cycle in the computer industry. And that's kind of the light at the end of the tunnel. So don't write off Altera off that much, but they are probably going to continue to pull back a little bit. Not going to be that. I heard Tom O'Brien last night talking about Starbucks, and I really love this company right now. They're really acting like most of the companies in the tech field did in the 80s. And that was, if you watched Green Mountain Coffee Roasters, they got kind of like slaughtered. They were down as much as $15 after hours last night. Starbucks is going to make their own brand of single cup coffee brewers and really go after the high test market of coffee with making what's that stuff that's like motor oil. I don't drink coffee, so I don't know a lot about it. But I like what they've done. They got close to Green Mountain Coffee Roasters. They figured out what the size of the business was by working with them. They've been able to really do a lot of things and find out about it. And this is exactly how Microsoft continued to grow. They slowly absorbed all the companies around them that were worth absorbing. And the companies that didn't have huge prospects continued to help them sell more and more computers. Starbucks, pretty interesting company because they are acting like a tech company. And I really like this kind of, basically absorbing, being the Borg, and absorbing and going after businesses that are close to you, like Green Mountain. Especially Green Mountain's had such a horrible 6 months with them stuffing the channel and a lot of issues with their accounting and maybe an economy with the truth. I really like that. One of the things I did say, and Tom did say it, was I love the quote from The Godfather, and that is, keep your friends close and your enemies closer. I've really noticed that this is the kind of thing where, exactly like the 80s and early 90s of the computer industry, that was that if you were a computer manufacturer or operating system manufacturer like Microsoft or some of the other big players out there, they were dying to get very close to you if you had decent technology, and they were more than willing to absorb you and take all your business away if it actually turned out to be anything decent. So it's one of those things that's there's so much in the way of doing good business out there. I know a lot of people, if you're Green Mountain Coffee Roasters, probably don't like it, but absolutely very good and interesting plays out here. And they act like a tech company even though they're a retailer. Google is working on a kinetic interface for Android. I continue to think that over time Google still has the leg up on Apple for a lot of the technology and being open source. One of the things that Google's now doing, though, for the Android interface is setting up a double sensor so you don't have to physically touch the screen anymore and put your greasy little fingerprints off of it. I remember I used to go to, before Netflix, a thing, I think it was called Movie Times. They rented DVDs. And I swear to God that everybody that rented a DVD before bringing it back must have gone by the Kentucky Fried Chicken, handled a bunch of chicken, and then wiped their greasy fingers all over the DVDs. Now, one DVD store had a nice little washer that would wash them all off. But this movie time place, every time I got a DVD from them, you could see these big greasy fingerprints all over everything. And wouldn't it be nice if you didn't have to touch those things? But Google's new patent is going to make a Microsoft Kinetic-like interface for the Android, and it looks like where they think they're going is either being able to be a little bit or even a lot farther away from devices like the tablets and the iPhones and Android phones to get to it. I'm going to go ahead and get to more stocks out here. The first one I wanted to show today was Sunoco products. See if I can pop that up, because we've got some more Gartley patterns out here that seem to be working out fairly good. And, you know, I tend to think of a lot of these stocks, a lot of times people will talk about Fibonacci's going exactly to the point. Gartley patterns are a little bit more fuzzy, kind of if you wanted to squint at the chart a little bit. But they do tend to have some fairly good projections. Sunoco products, SON is the symbol for it, has made a nice little Gartley pattern here. And if you are listening to me now, or maybe you're watching on Tiger TV and you want to see these charts, and you're watching in the Tiger's Den, you want to see them a little bit better without the artification of only having 8 colors in the den, you can. We do now have, I think it's channel 14, have a archive every evening of this show. So if you can't see it live, you want to go back and see some of these charts, we do now have the David White channel and the Tech channel on channel 14, and I think it's either 7 or 7:30 at night. You'll be able to go back and go through any of these and see them if you can't listen or watch on Tiger TV live, and see them in all their splendid beauty. Art of the chart does look awful good, especially showing these Gartley patterns off. But I'm going to go through it here real quick. We've got the January 19th high that starts your X point in your Gartley. What is that? $33. Is that? Yeah. I've got to get my ice fixed. $33.85. 420,000 shares. Is that right? Or 42.2. Yeah, it's 0.42. You get your A point on January 31st, $31.02. You pop back up for your B point, and that gets you up to February 9th, $33.66. You make your retrace, not too bad, of February 22nd, $31.82. We finish off what our projection was at $34.62 for a Gartley bearish butterfly out here. You get to $34.83, and you tuck right back in it today. So even though we have some kind of volume as we come back up, these Gartley patterns seem to work fairly decently, but you have to kind of watch out and how they're working out there. We're going to come back and try to race through a bunch of stocks fairly quickly, but keep an eye on it. This is one good one. Another good one to take a quick look at is Canon, CAJ. And you can find these in my newsletter every day. We'll be back in a minute.
In the world of financial markets, there's a new player in town with an exciting new way to trade the markets. Nadex now offers binary options as well as bull spreads in a wide range of indices, along with commodity and forex markets. With as little as $100, you can gain access to a new way to trade global financial markets while guaranteeing that your risk will always be capped. Nadex allows you to multiply your trading opportunities in ways never imagined before and access markets you once once thought were out of reach. With short-term trading opportunities available, including binary options expiring each hour the market is open, Nadex allows you to take advantage of a variety of market conditions regardless of volatility or market direction. Now is the time to take advantage of this exciting new market. Don't let this trading opportunity pass you by. Open your account today by clicking on the Nadex banner on the front page of TFNN.com. Nadex, a better way to trade.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
At Tiger Metal Exchange, we pay you more for converting your jewelry to cash.
Let's go to Brian in New Jersey. Hey, Brian, what's going on?
Hey, Tom, just want to let you know I did give you some jewelry. My jeweler offered me about $650, but you get a check in the mail tomorrow for about $1,200.
At Tiger Metal Exchange, it's all about honesty when converting your jewelry to cash.
Okay, let's go to Paul in Florida first. Hey, Paul, what's going on?
I want to commend you on the Tiger Metal Exchange. I just did a deal with you guys the other day.
Oh, good.
And very happy.
Well, I appreciate it. Now, Did you sell us jewelry or did you buy coins off us?
Yeah, I sold you jewelry.
Okay.
Yeah.
Awesome.
What we weighted at was less than you guys said, so, you're totally honest.
At Tiger Metal Exchange, we give you the tools to value your gold, and it's absolutely free. Call 866-618-8888 or log on to TigerMetalExchange.com. We've created the easiest, safest, and most honest cash for gold process. Tiger Metal Exchange. It's the only call you need to make.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the opening call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his opening call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his opening call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the opening call, a $64 value, visit TFNN.com today.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
We're going to rush through a bunch of stocks here in the last 5 minutes and kind of take a whirlwind tour of them. One of the ones I'm watching the closest here is Tyco International. Symbol is TYC. Have a nice little high out here at $53.38. 32 million shares. We've come back and come into that with about 2.6 million shares. Kind of seeing these things come out. Now, it hasn't busted that high. At least it hadn't here lately. 53.10 is what I show for the high here. So we've got another 28 cents. But coming in this thing with about a tenth of the volume. This is a good kind of pointer to start looking at companies in those kind of fields. Of course, it's a big industrial company with a lot of other holding companies out there, but always a good one to keep an eye at. We've had some other ones out here that have been fairly interesting. Stewart Enterprises, STEI, is another one that looked very interesting. A nice turnaround yesterday. 1.5 million shares on December 16th. $5.11 low. Came through there yesterday. Got a nice turnaround on 910,000 shares. Popped back up again today. So there are some stocks out here testing lows, coming in much lighter. Energy down is not all that exciting. Penn Virginia Resource Partners, symbol on it is PVR. When we look at this thing, not seeing a lot of stocks actually on this one, seeing some high volume up days and gaps on lower volume come down and tested. The volume up on the gap on Penn on what is that? So that's November 28th. It popped up coming out of a low. It's come back into these. But that gap up was on 823,000 shares that day. We came back and tested it 3 days ago on 520,000 shares. And this is kind of a good indication of what I've seen a lot in the marketplace. Colgate Palmolive, another one to keep an eye on out here. It hasn't quite tested that high. I suspect we're probably going to see that Monday or Tuesday. Symbol is CL on it. You've got a nice high volume high out here September 20th, 2.4 million shares, $94.89. Probably going to go back and at least test that. One of the things that you see is a high probability in stocks that hit 90 bucks. I think it's like 85% the number used to be. If they hit into the 90s, even though if they pull back like this one does, that about 85% of the time they will hit 100. So just statistically, one of these stocks that is good, kind of a teachable moment when you're looking at stocks that can actually come back out here and hit a high yet again. And I wanted to check in on the volume here before we left the show. Got a nice minute or two here. Last check, at least 3.1. Looks like we're going to come in with about 3.4 billion shares here by the end of the day. It's going to be probably 3.4 or 3.5 billion shares. About what we did yesterday. So continue to see these legs up on lighter volume and then one day down on heavier volume. Kind of looks like we're consolidating and chewing up these highs. I suspect we will probably bust out Monday or Tuesday, and then we'll find out if there's any volume as we go through 1375 on the S&P. Let's see what else we have. Regal Entertainment Group, SIFI, Schlumberger. Schlumberger looks like it's coming back in and testing a nice little low out here. Yep. Had the December 16th low out here, $3.70, 1.5 million shares. Or that's SIFI actually. Came in and, nice test there with 600,000 shares, SFI. Anyway, hang on. Tom O'Brien will be in here in about 8 minutes.